Today, we're going to be talking about the Lightning Network in Bitcoin. It's one of the most important developments in the global adoption of Bitcoin, and it's important to understand how it works and the potential it has for the form of money. Let's start with answering the question, what is the Lightning Network? The Lightning Network is a second layer solution that allows for instant, cheap, and secure transactions on the Bitcoin network. It works by creating a network of nodes that can process transactions quickly and cheaply. A node is simply a computer that is connected to the network. Nodes can be either payment channels or watchtowers. Payment channels are nodes that are used to process transactions. Watchtowers are nodes that monitor the network for any malicious activity. You might be wondering, why is this Lightning Network important? Well, the Lightning Network is important because it has the potential to help with the global adoption of Bitcoin, making transactions cheaper and faster. Makes it more practical for people to use Bitcoin for everyday purchases. Scalability has always been a core criticism of Bitcoin's use case as a form of money. With a transaction speed of only 7 transactions per second compared to Visa's capabilities of 4,000 transactions per second, the criticisms are justified. However, the Lightning Network changes this without changing the underlying layer 1 blockchain. The Lightning Network can handle 1 million transactions per second. That absolutely dwarfs Visa's capabilities. And not to mention, the transaction fees on the Lightning Network are close to zero. With faster transactions and lower costs, the Lightning Network has the potential to make Bitcoin a more practical form of payment for everyday use. This could help to increase the number of people using Bitcoin, which would in turn help to increase its value. This is because one of the core components of what makes money effective is both exchangeability and portability. The more people that use Bitcoin, the more effective it becomes as a currency. So, the Lightning Network is important because it has the potential to help with the global adoption of Bitcoin, which would make Bitcoin more effective as a currency. By being able to instantly send and receive Bitcoin transactions across the globe with low fees, the Lightning Network has the potential to make Bitcoin the go-to currency for international transactions. For local payments, the network can also help to reduce the reliance on fiat currencies. People are starting to understand the negative effects of fiat currencies and how inflation is taking away their purchasing power. But holding fiat currencies is still essential for most nations because there isn't a better alternative. But with the Lightning Network, people will be able to hold Bitcoin as their primary form of currency, which could help to reduce the reliance on fiat currencies and help to protect against inflation. Countries like El Salvador no longer have to depend on the US dollar and can now use Bitcoin as their primary form of currency. This is a big deal because it shows that Bitcoin can be used as a viable form of currency and helps to increase confidence in the cryptocurrency. In fact, since El Salvador has made Bitcoin legal tender, civilians have been transacting with Bitcoin through the Lightning Network. Layer 3 applications like Strike help to facilitate the process and make the technical aspects of the Lightning Network more user-friendly. It's an interesting time for Bitcoin. Through the Lightning Network and a real-life national example, we are witnessing Bitcoin's use case as a form of money. So how does the Lightning Network work? The Lightning Network works by taking transactions off the main blockchain. This is done through a multi-signature address that works as a mutual safe between the recipient and the sender. Within this payment channel, only the payment of Bitcoin can be released when both parties agree to the transaction. A balance sheet is also created during this process that has instructions on how the funds in the balance sheet should be distributed. The balance sheet can be thought of as a contract and is stored within the payment channel. The creation and opening of the payment channel are transparently seen on the main blockchain. This is because it ensures that the recipient can see the funds have actually been deposited into the payment channel, and that the intention is there to make a payment. The price adjustment is made between the two participants' addresses on the payment channel, and private key signatures from the both conduct the transaction. A private key signature is like a digital fingerprint, and it's unique to each individual. This is what's used to create the balance sheet, and it's also how both parties can see that the other has signed off on the transaction. This payment channel stays open, and a copy of the transaction is recorded on the main blockchain. However, transactions themselves only occur through the multi-signature mutual balance sheet. This shared payment channel is not a part of the main blockchain. The payment channel has often been described as the rails of the Lightning Network. It transports the transactions but doesn't store them. The beauty of the Lightning Network is that it doesn't require a third party to facilitate the transactions. This allows for trustless and near instant payments between two parties. If the business is finished and transactions are no longer necessary between the two parties, they can simply close the payment channel. This would be like closing down a rail station. The final copy of the balance sheet is then recorded on the main blockchain. To close the payment channel, the parties simply have to broadcast the last copy of their balance sheet to the Bitcoin network. This is where miners come into play. These machines validate the information presented and release the confirmed amount of Bitcoin from the mutual safe or payment channel back into each participant's wallet. It's also important to mention that any party can use their copy of the latest balance sheet contract to close the payment channel and receive the funds back into their wallet. This prevents one side of the transaction from keeping the channel open and holding the funds hostage in the payment channel. To summarize the entire process, it can be explained as a smart contract built through algorithms and private confirmation that ensures both parties are happy with the exchanged amount of Bitcoin without the need for a third party. This system also enables users to send any amount of Bitcoin, big or small, and it's completely trustless. The Lightning Network is a game changer for Bitcoin and has the potential to completely change the way we use money. Now, you might be thinking that you'd have to open a lot of different direct payment channels, as each person you transact with would need their own channel. But that's not the case. You can have indirect payment channels. Let's say, for example, that you want to buy a coffee from your local cafe, but you don't have a direct payment channel with them. You could have a payment channel with a friend who has a payment channel with the cafe. This would be an indirect payment channel. The great thing about the Lightning Network is that you can utilize the network to avoid having to manage lots of different payment channels. The Lightning Network finds a route with the least intermediaries to avoid fees and increase transaction times. You can have as few or as many indirect payment channels as you'd like. If you do business with a party regularly, it can be helpful to set up a direct payment channel with them. If you don't have a direct payment channel, the Lightning Network will still work to find an indirect route for you. This innovation brings decentralized control to the people rather than depending on archaic institutions like banks. For example, if you're getting a meal at a restaurant while traveling, it might be more effective to just let the network find an indirect route for you. This is because the probability of you returning and doing business again is slim to none, even if the food and service are excellent. In this scenario, it might just be more effective and efficient to just use an indirect payment channel. Let's say someone you work with internationally recommended that you go to the restaurant because that's his favorite spot to eat. It's likely that he would have a payment channel open with the restaurant. This would mean that there would only be one intermediary between you and the restaurant. This differs from even credit card processing because the parties involved include at least two banking systems as well as the credit card companies themselves. With currency conversion fees as well as multiple intermediaries, the transaction for just that meal can be expensive and slow. As you can see, the Lightning Network innovated a traditionally inefficient system by introducing a more efficient way to process transactions. This system is still in its early development stages, but its potential is revolutionary. The more people that use the Lightning Network, the better it works. It becomes more efficient and easier to use as more people get involved. The Lightning Network increases the value of Bitcoin through a network effect of adoption. A networked effect is when a good or service becomes more valuable as more people use it. It's a positive feedback loop where the more the people that use the network, the more valuable it becomes. This encourages adoption and creates a virtuous circle where the value of Bitcoin increases, leading to more people using the Lightning Network, which increases the value of Bitcoin. The Lightning Network is a key piece of infrastructure that will help Bitcoin scale to become a global currency. It has the potential to improve the way we use money, and it's already being built on top of the Bitcoin blockchain. Through companies like Strike, anyone can start using the Lightning Network today. The Lightning Network also unlocks unique payment methods that traditional finance has not seen before. For example, micropayments, or payments that are too small to be processed by traditional systems, can now be made possible. This opens up a whole new world of possibilities for how we can use Bitcoin. Imagine a streaming service that rewards Bitcoin for each second listened to a song or a video. This payment innovation can reward users while marketing a new product simultaneously. It could also help reduce fraudulent chargebacks that are common in traditional systems. The reason why is because each payment is made on the spot and can't be reversed. This means that there's no way to charge back a payment that has already been made. Many e-commerce owners will provide an excellent product just to have the customer file a chargeback later and get their money back. If the company reviews the product and has a money-back guarantee policy, they can simply agree to refund the customer without having to go through a bank. This way, there's no chargeback risk for the company and the customer is still happy. Of course, a merchant could go against their refund policy, but that would hurt their reputation. Chargeback scammers don't have to worry about this because they can simply create a new account and scam someone else. This is a huge problem that is often overlooked, but through the Bitcoin Lightning Network, the possibility of chargeback is completely eliminated. The Lightning Network is constantly being developed and improved. Many different projects are working on the Lightning Network, and it's exciting to see what the future holds for the innovative technology. It's dispelling many of the critics and continues to ensure that Bitcoin can be used as a daily currency. If you found this video helpful, please like and subscribe for more content like this.